Hey guys, welcome back to the channel. In this video we are going to talk a little bit about the stock market, but before we do that we're going to go over some things about falling off of a cliff. Just stick with me, I do have a point. If you're new to the channel, make sure that you subscribe to the channel, like the video, watch the video first to see if I actually make some sense here and you actually find some value in it as well. So first of all, falling off of a cliff can result in severe potential fatal injuries due to the extreme impact and deceleration, including broken bones, internal organ damage, and brain trauma. Impact and deceleration, the sudden stop upon hitting the ground or water after a fall from a significant height causing massive blunt force trauma. Possible injuries: massive blunt force trauma, brain injury, spinal damage, internal bleeding, fractures, tendon or muscle tears. Factors affecting the outcome: height of the fall, landing surface, body position, and then survival. While falls from great heights are often fatal, some people have survived falls from significant heights, though they often sustain severe injuries. If you or someone you know has fallen from a significant height, seek medical attention immediately. So why am I talking about this, and what in the heck does this have to do with the stock market? Well, let's talk about it. So a severe fall, okay, impact and deceleration, the sudden stop or hitting of the ground, okay. People can be injured, but it depends on the height of the fall. Some people can die. People who don't die, all right, they may have severe injuries, but if they didn't die, most likely they're going to recover over time, okay. So this relates to the stock market in a sense of, have you looked at the S&P 500 yet? Let's take a look real quick. And here we go, okay, the S&P 500, we fell down here. It's like we slid down a hill. We started climbing the hill, we got to the edge of the cliff, and now we just basically jumped off or fell off the cliff, okay? Pretty significant height. We almost actually triggered where the stock market basically just shuts down for the day. We're like so close on yesterday. However, you got to keep something in mind here, guys. Look at the technicals. Look at the technicals. Look at the RSI. We're pretty much at, I mean, you can't really go any lower than that. The MACD, it's pretty much off the chart at this point. We hit a low of 50, 69, 90. Can we go lower? 100% we can. Okay, yes, we can go lower. How much lower? I'm not sure. It's going to have to do with all the tariffs and all that type of stuff. But eventually what's going to happen, guys, is you're going to hit the ground. Okay, you're going to hit the water. And then you're going to look at your portfolio and you're going to be like, dang, I didn't die. Okay, I did not die. And yes, I'm looking at my portfolio and it's red. You're bleeding, you got some trauma, you got some injuries, and eventually you're going to start healing and it's going to start moving its way back up. Okay, and some of you who keep looking at your portfolio and watching it dive and die and go down, you may need to seek medical attention. Just joking. But let's take a look at the fear and greed index, and let me explain to you why I think that, at least for the short term, we have to see some upward momentum in the market. Even if we can't sustain it, even if we kind of have a little head fake and pull down further, it's a good opportunity to buy coming in on Monday. I actually bought some stuff on Friday because I'm like, there's no way that this just keeps going down and down and down and down and down constantly and go to zero. Just not going to happen, okay? Let's take a look at the fear and greed index. Okay, here we go. So previous close on extreme fear. Guys, we're at 4. We are at 4. Do you hear what I'm saying? We are at 4. It's not much more room to run till you get to 0. I've never seen it this low ever, to be honest with you. But let's take a look at this. 1 year ago, we were neutral at 53. A month ago, we were extreme fear at 11. 1 week ago, we were extreme fear at 21. The previous close, we were at extreme fear at 7. Okay? So we keep coming down and down and down. Eventually, something's got to give to where this needle starts kind of moving up in this direction. All right, and it doesn't have to happen overnight. It can be slow ticks to where we're trying to come back and get out of extreme fear. And once you get out of extreme fear, people are probably going to start coming by more here. You're going to feel more comfortable. Oh, well, maybe the world's not ending. Maybe we're going to buy a little bit here in fear. And it's going to keep on coming, keep on coming, keep on coming. And then this is whenever the real big runs happen, is because people start kind of getting nervous and they start buying in. And then things just start going up and up and up and up and up. And it doesn't have to necessarily last forever, right? It can just be like a big spike to the upside before another pullback. However, I'm just saying this is a good opportunity to buy some of the stocks that you've been eyeing that have fallen, and you looked at and you're like, dang, I missed it. I wish I'd have got in at these prices. Okay, so I just want you to keep that in mind. Another thing that they take a look at is VIXCentral.com, the VIX. The VIX is at 45.31. We were at, I think, 30. Okay, we were at 30 before the close on, or before Friday open, I believe. I think we were at 30 point something. So we spiked up 15 points. Guys, I'm telling you, it's not going to last. Okay, so even if we go, let's say we go higher, just hypothetically, and we go to 50. Can you imagine? I mean, typically this thing's down like, I mean, in the teens. Okay, so it's not a sustainable thing for it to just stay at 45. Yes, we're volatile. Yes, there's a bunch of uncertainty. Eventually, it's going to subside, and it's going to level off, and then people are going to come and buy in because they're looking at the prices and they're like, dang, that's what I want to buy, this particular stock at. I've been eyeing this stock for 6 months, hoping it got to that price. Boom, there it is. I'm buying it. Okay, so let me take a look at the charts again and show you what I bought some yesterday and kind of give you my plan moving into next week and beyond. All right, guys, so the first one that I bought is NVIDIA. Okay, I got some shares here at about 93, 94 bucks. I didn't buy everything that I wanted because I wanted to wait. Really, for 90 was my number, but if it goes below 90, so if it breaks below 90, perfect. I'm going to wait and load up to see exactly how low it goes, and I'm going to buy some more. Okay, longer term overall, this stock is going to recover and move, and whenever it does, holy cow, I want to be in the position to take advantage of that. Okay, but I did buy a little bit. I didn't buy an exceptional amount, but I did buy some. Okay, that is NVIDIA. Second one I bought was Sasol. Started off my position on it. I've talked a little bit about that on the channel. Currently at 312. I nibbled here at the bottom, and if it goes below that, I'm going to get some more, and if not, if it keeps going up, at least I got some skin in the game. But anything under $4 is where I'm looking to buy on Sasol, and if it continues to move down, especially if it gets into twos, I'm going to come and double my position there and just keep on doing that until the market starts to recover. Okay. Other one that I bought yesterday was TQQQ. We got as low as $40.03. Actually need to redraw the fib level here. I think I bought at about 43 or 42 or something like that. And so 93.79 is your tip top. And so a nice little double bottom pattern kind of forming here. And so I did buy some there. I didn't buy any Amazon or Tesla yet, but I am eyeing Tesla for sure to add to my position. Since we broke that 247 level, I'm eyeing it here at about 182. If it gets to that point, it sure might get there. So I'm just kind of watching. If not, I've already got some money invested in that, so I'm just kind of watching there. Amazon, I didn't buy any more Amazon like I mentioned, but I am keeping an eye on it. Again, if it gets to 150 bucks, that might be where I come to buy some more of that. So I basically deposited some money in yesterday, put about half of it to work, and I'm going to wait on the following week for next week to see how the market plays out before I deploy the rest and decide what I'm going to do. Okay, if for some reason, I'm going to tell you now, it fell straight down. If the market spikes up and TQQQ goes all the way to like $51, I'll probably take some profits or all the profits off the table on that. And because realistically, we're still in a downtrend. Okay, we're still in a downtrend. So if this spikes up to 51.50, a straight spike up, the good chance I'll probably go, and everything that I bought on Friday, I'll probably just take profits on it and watch from there. Especially if this spikes straight up on Monday, like right off the open, it just boom, it comes up swinging, and I'm in profit. I'll probably take it. And what I would like to see is, it spike up, it fall down, and it bust through that 51, 53 level, and then I would feel more comfortable. Because overall, we are still in a downtrend. This bullish indicator here is still trading underneath where it needs to be. So this blue line needs to cross over that red line there, and that way we can confirm that there's a move to the upside. Just like whenever it crosses and it goes underneath, we confirm a move to the downside. Like right here, boom, it crossed here, and then we knew, like, oh gosh, we have some downside coming. So I kind of prepared myself to get ready to put some money to work and kind of go from there. So anyway, just don't fully freak out just yet. Have a plan in place, have some cash available, because the markets may fall lower than what we looked at on Friday. There's a chance that it can definitely fall lower than what we looked at. But eventually, like I said, eventually it's going to bottom out, and then things are going to subside, and people are going to look at prices and say, I would buy stuff here. And they're going to come in and buy. And then all of a sudden, more people are going to come in and buy, and all of a sudden, the market's going to start recovering, and then things are going to start moving back into upward direction. Because just keep in mind, historically, the stock market does go up. Even if we get into a bear market, which we basically are now, we're down 20% from on the major exchanges. So we're basically in bear market territory. So it's something to kind of consider and keep in mind. But if for some reason we stay into a bear market and we're there for several months, use it as a buying opportunity, in my opinion. Every time that it comes down in oversold territories on the 4-hour time frame on the S&P, then that means all the other major plays are pretty much there. Come in and buy and just hold for the longer term. All right. And if you can't take what you're looking at there, if you're not down significant, maybe pull your money out and just wait to get back in if you can't stomach it. But if you can, if you've got money in the market right now and you don't necessarily need it like now, right now, today, and you have some extra cash, these prices that they're presenting to you right now is going to benefit not tomorrow maybe, but 6, 12, 24 months down the road. So you got to kind of think longer term in that aspect. So anyway, that's all I got for you in this one, guys. Let me know your comments below. Other than that, we'll catch you in the next one.